I'm recording this session right now. It's one of the most important days of our trading. If you understand everything today, you are already 50% closer to becoming a good forex trader. Sure, guys. So I would like you to mute yourself while you're listening. If you have any question, that is when you will now unmute yourself. Let me know what you can be able to cover today. So if you look at my screen, even if you cannot see my screen, I am recording everything. Sure, you get. I will find a way. Either I upload it to my YouTube channel and send you the link so that you watch it. I want you to rewatch this video again and again and again because it's very, very important. Remember that our major goal is here. Look at our goal. Our goal is here. And that goal is for us to formulate a trading strategy. Sure, you get, that's it here. We want to formulate a trading strategy. And I said, why is trading strategy important? You cannot make money from this highly complicated forex market without having a strategy. Even military, before they go to war, they have a strategy. Business people have business strategies. So you get, content creators have content strategy. Everything you do in life, you need a strategy. So you get. So now, how can you come here in this type of chart that you see how buyers are going up, buyers are moving price up, and sellers are trying to counter the movement of buyers up and down movement? So complicated. Liquidity sweep, a lot of macroeconomic factors are also affecting this market. So it is very difficult for retail traders to make money here without having a strategy, without having a trading methodology, without having in-depth understanding of the market. Shall you get? So, and that is where we are. And if you check here, I said you need a trading strategy, you need a trading methodology, especially as a beginner. And as a beginner, I will also want your trading methodology to be objective, rule-based. If you keep on advancing, you can decide to make it subjective or probably intuitive. But for now, we want to get a simple rule-based trading strategy, and you want to also understand the market dynamics. So you get, that is what the goal is right now. Right? And I said for you to be able to get a strategy, you need to understand at least some concepts. There are some concepts about the market you need to understand. You need to understand market structure. You need to understand candlestick patterns. You need to understand different points of interest. And all these concepts you are seeing here, they answer one question. They answer one or two questions about the market. You understand? For example, the market structure answers the question of who is in control of the market. You get? It answers the question of who is in control. So you cannot come here and start trading a market you don't understand the behavior. That's why market structure is a study of market behavior. So with the way the market is behaving, you'll be able to know who is actually in control of the market. And as a retail trader, you want to trade in the direction of those that are in control. You don't want to start fighting with the trend. You need to know the trend and then trade in the direction of the trend. Sure you get? So the market structure will help you answer the question of who is in control of the market. Is it the buyers? If buyers are in control, you want to be buying. If sellers are in control, you want to be selling. That's what the market structure will help you do. Now, the candlestick patterns will help you to answer the question of where do I buy from? Not just where, when do I buy? When should I buy? You understand? So the question of when is what the candlestick pattern will help you answer. Why point of interest will help you answer the question of where, right? Where. And then this one now will be what. Let's just assume that market structure will tell you what. Right? What are you going to be doing? Market structure will tell you, okay, bro, based on the study, based on our analysis of market structure, we are buying. That is how it happens. Market structure will tell us, okay, we are buying. Why are we buying? Because the market structure is bullish. From the analysis of market structure, we can see that buyers are in control, so we are buying. Now, the next question will now be, where are we buying? Are we buying now or we are buying later? Right? It is the point of interest that will tell us whether where we are buying. Right? Where we are buying. It will not tell us, okay, is it that we want to buy at a support level, or we want to buy at a demand zone, or you want to buy at order block, or you want to buy at breaker block, or you want to buy at fair value gap, or you want to buy at maybe liquidity sweep, whatever concept you want to use, that will tell you where to buy. You understand? Now that is why the you need to understand point of interest. Now today I want us to look at this one. Candlestick pattern will help us answer the question of when. You understand? When. So now let's just assume that we've done an analysis and price has already come to our point of interest, which is where we want to buy. Is already at the zone where we want to buy. Candlestick pattern will help to give us the final confirmation. You tell us, okay, buy now, because we've seen a bullish engulfing candlestick pattern. Buy now because we've seen a rejection candle, or buy now when that bullish candle closes. You understand? So candlestick pattern will help us to know when to buy. Here you get why a point of interest will help us to know the exact area or the exact places to buy. So you get why market structure is the king. Market structure will now tell us, okay, whether we are buying or selling. Depends on our understanding of market structure. So you get, so we are going to be taking these concepts one after the other: market structure, candlestick patterns, and point of interest. Right now, today I want us to look at candlestick pattern. And remember that there is a PDF I shared with you. If you can still remember, I shared a PDF with you, and that PDF is Candlestick Trading Bible. Remember where we started? We started by saying that in this forex market, we have a lot of charting methods. We have different charting methods, and I came to our trading view here and I showed you the different charting methods we have. That we have candlestick chart, we have holo chart, holo candles, we have the volume candles, we have the line chart, we have the step line. These are different charting methods. And when I say charting method, what I mean is this: CH, I've showed you before, CHART, and as opposed to this, it's not this type of chart. This one is a WhatsApp chart. Are you getting now? But this one is trading charts. Share get forex chart. So that's it. This one is chart, and this one is the chart I'm talking about. Now, if you check here now, you see that you have a lot of charting methods. All right. These are the different graphical representations of what is happening in the chart. All right. What is happening in the market. If you click here, you see line chart. This one is line chart. You see how everything has changed into line. Alright, if I come here, I can also change it to area chart. Look at area chart. And we also came to the conclusion that, bro, that as retail traders, because of the fact that you are retail traders, we need enough information. Right? The more information we can be able to get, we need enough information at our fingertips to be able to make informed trading decision. That is why as retail traders, we came to the conclusion that we should be analyzing the chart with what? Candlesticks. Because candlestick will give us enough information about what is happening between buyers and sellers that will help us to make informed trading decision. I hope you can still remember. And I say, okay, what are the types of information? What are the different information we can get from the candlestick chart? I mentioned that the candlestick chart gives us information about the momentum. As it gives us information about the momentum. You can still remember. I also say that the candlestick chart gives us information about the open price. It gives us information about the close price. It gives us information about the high, right? And also gives us information about the low. Right? So with this information we get from the candlestick chart, we can be able to make informed trading decision as retail traders. So now that we've come to the conclusion that we are going to be analyzing with candlestick charts, with the Japanese candlesticks, because of the level of information we can get in it, which we won't be able to get from other charting method like line chart. Line chart might not tell us we won't be able to see clearly the open price, the close price, the high, the lows, even the momentum at that particular point in time. We won't be able to see it from line chart or this other different charting methods. Share again. So that's why, since we concluded that we're going to be using candlestick chart, we now went ahead and started studying the Japanese candlesticks. And the easiest a place to learn about Japanese candlesticks is from the Candlestick Trading Bible. This book here that I've sent to the Candlestick Trading Bible. This is the best place to learn about Japanese candlesticks. So in our class then, I brought out, we looked at the anatomy of candlesticks, where we now saw the open, the close, and all these things about Japanese candlesticks. So remember that we say that this is a bearish candle. This is how a bearish candle looks like. It's going to have a typical bearish candle. You have a wick to the upside, wick to the downside probably, and a typical bullish candle is going to be like this. It will be green in color. A bullish candle is going to be green in color, and I told you then that the color does not matter. However, we just prefer to use green and red to represent a bullish and a bearish candle. And we also came to the conclusion that a bullish candle will have the open price below, the close price above, the upper wick here, the lower wick, and this place is going to be the body of the candle. And the bearish candle is the opposite, where the open price is above, the close price is below, the low of the candle, which is the lower wick, is down, and the upper wick is up. And of course, this is going to be the body of the candle. And we now see what is the implication of the candlestick body. Right, I made us understand that each of these components of Japanese candlesticks, each of these components has their meaning. I don't know who has been calling me. Just give me some seconds. So, right, so we now say that each of these components of this candlestick have their significance. Here you get their significance, right? Where I say that the upper wick of this candle, the upper wick is carrying information about how high buyers were able to take price up. This is the upper wick. It's carrying information about how high buyers were able to take price up, while the lower wick is carrying information about the low, how low sellers were able to push price down within that particular trading session or time frame. Alright, why the open price is what tells us whether the candle is bullish or bearish. The position of the open and close price, it's what tells us whether the candlestick is a bearish or bullish candle, and not actually the color. We now say that when the open price is below and the close price is above, that it is a bullish candle. And when the open price is above, like in this situation here, the price opened high and closed low. The close price is below, right? And this is of course the low of the candle, and this is the high. So we now say that this is a bearish candle, because the open price is above, the close price is below the open price. And of course the candlestick body, the body carries information about the momentum. The candlestick body, the body carries information about the momentum. Alright, so this is what we've been able to do. Alright, I just gave a brief summary. So let us now go into what we have today. Since we can be able to identify a bullish candle, a bearish candle, we've seen the different components of candlestick anatomy. Right, and we've seen the significance of these different components of the candlesticks. Right, so I want us to now look at candlestick pattern. Because our understanding of candlestick pattern is very important. All right, what is the essence of candlestick pattern? Let me show you something from this book. I don't know whether okay. Yes, candlestick pattern. Candlestick patterns are an integral part of technical analysis. Now, whether you can see this, it is an integral component of our technical analysis. That is candlestick patterns. Candlestick patterns emerge because human actions and reactions are patterned and constantly repeated. You see now that what you are seeing here, it is the human actions and human reactions is what you are seeing here that are printed on the screen in form of candles. Alright, and I told you that as the shapes of this candle and the color of these candles differs from each other, that is how the information they carry also differs. That's why you see a candle that has a very long wick, you see a candle that has a very small body, you see a candle that is green, that is red. So as the shapes of this candle differs, that is how the information they carry. So learning candlestick pattern is just like the language of the market. You understand? It is the language of the market. Each candle here carries information. Each candle tells us a story. And after you must have understood candlestick pattern, you can be able to disintegrate and dissect every candle you see on the chart based on each candle, and also when the candles come together. One candle can stand alone and give us very big information that is vital for us to make informed trading decision. And multiple candles can also come together to give us information as well, and that is what you are going to be learning. So another way to look at candlestick pattern is this. Remember I told you that in this forex market we are just the retail traders. We are retail traders. I don't know whether you can still remember, I and you, we are retail traders. And I say that it is not easy for a retail trader, because a retail trader has little or no money. You understand? A retail trader doesn't have enough money compared to these banks and big traders. These banks and financial institutions, or the people who call the market maker, they control large volume, but a retail trader just controls small volume with small amount of trading capital. And because of the fact that the forex market is a very big market, up to $7.5 trillion is traded on a daily basis. So even if you have $100 million, you are still a retail trader, because $100 million is just 0.000% of this particular money we are talking about. You see, so as a retail trader, you don't have control over where the market will go. You don't have control over price. So, but as the market is moving up and down, as the big boys are pushing price up and down, they are leaving clue for us. They are leaving clue for us, the retail trader, in form of candlestick patterns. There's a candlestick pattern you see, and you know that yes, that buyers are coming into the market. It will help you to know early enough when the markets want to change direction. Candlestick pattern, chart pattern helps you to know when the market wants to change direction, when buyers want to take over the market, or when buyers are losing momentum and sellers are gradually coming into the market. So candlestick pattern is almost everything, right? It is very, very important. So we need to look at the few candlestick patterns that are very, very important. All right, candlestick patterns that has 5, because these candlestick patterns, they have predictive value. You can use it to predict where price will go next, even though it is not 100% and nothing is 100%. But if you join candlestick pattern with other things you are going to be learning, with other confluences, it will help you be a good trader, can be able to make a more informed trading decision. Right. So with in our this thing here, you see that I mentioned a few of the candlestick patterns. There's a candlestick pattern that is called doji. There's a candlestick pattern that is called the engulfing. There is a star. There is pin bar. There is harami. There is tweezer. In fact, don't worry. Now, at this beginning part of your journey, what I want you to do is just to focus on knowing the structure of these candlestick patterns. So each candlestick pattern I mentioned, you'll be able to identify them in the chart. So in another training session, I will show you how to actually trade the candlestick patterns. But for now, just know how to identify the candlestick patterns. Your goal here just to train your eyes to be able to spot them when you see them in the chart. That's what your goal is right now. So I will write it now, candlestick patterns. Alright, candlestick patterns. And if you are told to make 1 or 2 sentences about candlestick patterns, just let us know, or let them know, that these candlestick patterns, they have predictive value. You understand? Candlestick pattern, they have predictive value. You can use them to predict where the market will go. You understand? candlestick pattern is just like the clues, right, that the big banks are leaving for us. As price is moving up and down, they leave clues for us in form of candlestick pattern and chart patterns. All right. What else do you know about candlestick pattern? Say that as the human behavior is, as buyers and sellers are pushing price up and down, you understand? This candlestick pattern is what helps to print the behaviors of the buyers and sellers for us in the chart. And remember that human behaviors are repeated. You understand? You see, that's why we call it pattern. Anything pattern means that these patterns can be repeated. It is repeatable. You see what I've mentioned here about candlestick pattern. They have predictive value. It's just like the clues that price leaves for us as they go up and down. And I said that these candlestick patterns are repeatable, and of course they are pattern. Anything that is pattern means that you can see it here, and here. So it's just like a pattern, and once you spot that pattern, you'll be able to know what price is telling you. You should be able to know what to do when you spot a particular pattern, right? So now let us look at the first one, which is going to be engulfing pattern. Let me get this my tool here. So engulfing. So there's a candlestick pattern that is called engulfing, something like this. So is a candlestick pattern, right? Of course, when you hear the word engulfing, the first thing that should come to your mind is something like enveloping. Sure, you get. Very important. Later, you watch this video again and again and again. If you have any question, you can always ask me. Enveloping. Envelope. Alright, this is enveloping. Then something like overshadowing. Overshadowing. Something is actually overshadowing the other one. Shadow. Overshadowing. Enveloping. Something is engulfing. So there are two things. One is bigger than the other. The bigger one is actually enveloping or overshadowing the other one. Shall you get? And remember, every candlestick pattern we learn here has the bullish type and the bearish type. Shall you get? So for this engulfing candlestick pattern, the bullish part of it is called bullish engulfing. Bullish engulfing. Bullish engulfing. Why the bearish version of this candlestick pattern is called bearish engulfing. So we call it bearish engulfing this way. Then if you read that particular PDF I sent you, you see all these candlestick patterns there. Sure, you get. This is bullish engulfing for buying and bearish engulfing. So let me also say this, very, very important. Remember that you are here to buy or to sell. And the two major players you have here are the buyers and the sellers. So every candlestick pattern we are going to be learning, we have the one for buying and have the one for selling. Shall you get? Now the bullish engulfing candlestick pattern is the candlestick pattern you see. Once you see bullish engulfing, the first thing that should come to your mind is that the bulls are about to take over the market, and it is time for you to buy. The bulls are taking over the market and you should buy. And when you see bearish engulfing, it means that the bears, the bears, right, are the sellers. The sellers are taking over the market and it is time for you to sell. So let me just give you a structure of the bullish engulfing candlestick pattern. Look at how it looks. Something like this. You see a bearish candle, and then you will now see a bullish candle that now envelopes this bearish candle. Show you see them. So what you are seeing here is bullish engulfing. Bullish engulfing. What happened here? Remember that this bearish candle here show that sellers were in control temporarily, and then this bearish candle means that sellers were in control, and then the bullish candle means that buyers came and took over power and engulfed and enveloped, or buyers now came and overshadowed the sellers, and buyers are now about to take over price. So a bullish engulfing candlestick pattern is made up of two candles. The first one is a bearish candle with smaller body, while the second one is a bullish candle with a bigger body. And remember that when the body of a candle is big, it shows that that candle has bullish momentum. The more big the body, the bigger the body of the candle, the more the buying pressure or the bullish momentum is. So whenever you see a bullish candle that has a bigger body that now covers or envelopes a smaller bearish candle, it is bullish engulf, and it means that buyers are in control and buyers want to keep on pushing price up, and it is time for you to buy. Now the opposite of bullish engulfing is what we call bearish engulfing. In bearish engulfing situation, you want to sell, and then the confirmation that it is time to sell is when the sellers or bearish candle, you see how this bearish candle came and enveloped this one, came and engulfed this bullish candle. What this means is that yes, sellers are now in control. Sellers want to keep on taking over price, and you should sell. So you are going to come to that. But what I want you to know now is what is a bullish engulfing candlestick pattern, what is a bearish engulfing candlestick pattern. If you open your chart, can you be able to spot a bullish engulfing candlestick pattern? Can you be able to spot a bearish engulfing candlestick pattern? Once you're able to spot them, don't worry. In our next class, I'm going to be showing you. You see that it's not every bullish engulfing candlestick pattern that you will buy. It's not every bearish engulfing candlestick pattern that you will go and sell. So we sell and buy using engulfing based on what the context where the engulfing candlestick pattern is formed. So we are going to look at that later, but for now just know how to spot it. So this is it about bullish engulfing, and this one is bearish engulfing. All right, I believe that is clear. Another candlestick pattern I want us to look at is the candlestick pattern we call doji. There's a candlestick pattern we call doji. In doji candlestick pattern, doji stands for indecision. You get doji because this is Japanese candlestick. Doji means indecision in Japan. At doji, indecision. Let me write that down. That's doji, indecision. Alright, so we have two types of doji. Every candlestick pattern will have two types, the one for buying and the one for selling. So the doji, the bullish doji is called the dragonfly doji. It's called the dragonfly doji. So don't worry, the names of this candlestick pattern does not really matter. What is more important is your ability to spot them and then understand the information they carry. The information the candlestick patterns carry is more important than the name. So don't stress yourself with cramming the names. This one is this is dragonfly doji. You can even call it bullish doji if you like. Just call it bullish doji. Don't stress yourself. But what you know is that once you see this candlestick pattern, you know what it means, you know the information it carries, and you know what to do when you see it, especially if you see it in the right place. Alright, so that is it about dragonfly doji. We have the other type, the opposite. That one is called the gravestone doji. Alright, this gravestone doji is the opposite of dragonfly doji. Gravestone doji, it is the bearish doji. So when you see this, it means you are looking for selling opportunity. Sellers are potentially taking over the market at bearish doji. So something like this. Sure you get. Remember that doji stands for indecision. Alright, I will still explain that later. You know that when you see candle like this and candle like this, so this is an indecision candle. Let me break this thing down again. If you see a candle that is green like this in color, this type of candle, this is not an indecision candle because decision was made in this candle. If you see this one here now, this is not an indecision candle because the decision was made. I don't want to be asking you because of time. Later in our class, I'll be asking you questions a lot. So the decision that was made in this candle is that the bulls are in control. This is a bullish candle. The bulls are in control. The bulls won. And in this candlestick B, the decision is obvious. It is a bearish candle. The sellers are in control. But in a candlestick like this, you see that it is an indecision candle because the open price and the close price is almost the same place. If you check this one here, the open price is obviously up here and the close price is obviously down here. Then in this green candle, the open price is obviously up down here and the close price is obviously up here. So there is a significant difference between the open and close price. And since the close price is above the open price, a bullish candle. But in this situation here, the open price and the close price are the same place. I see that this candlestick closed exactly where it opened. In football, this is what we call 1-1 or 0-0. Right, price opened at $100 and closed at the same price, which is $100. So neither the buyers nor the sellers won. It is indecision candle. You understand? But here now, this red one shows that sellers won, but this green one shows that buyers won. But this one, where the open and close is the same place or almost the same place. The difference between the open and close price here is infinitesimal, very tiny, and almost the same. But here there is a significant difference between the open and close price, both in candlestick A and candlestick B. Alright, I don't know whether this is making sense. Don't worry if it's not making sense. I'm still going to be explaining these things later. And as you start analyzing in real charts, start seeing them in charts, you'll have better understanding of each of these things. Alright, so now the bullish doji, of course, the bullish doji is like this. That's the dragonfly doji. It's like this. While the gravestone doji is actually this way. If you open your chart, that's why I said if you open your chart, you are going to be seeing candles of different shapes, different sizes, funny shapes. Alright, and as these shapes differs from each other, that is how the information they carry as well differs. So if you check here now, this candle here shows that the bulls are potentially in control. This one shows that the bears are potentially in control. I'm going to explain why. If you check here, you see that where is the open price of this candle? It opened here. And where did it finally close? It closed almost at the same place where it opened. This is the open price and this is the close price. So let me attach a price to it. This price here could be, let's just say $300. Right, the price is $300. Alright, this is where it opened, and then sellers push price down to as low as $50. Look at how low sellers push price of this commodity down at that particular time frame. Let's assume that this is 1 hour time frame, and of course you know that 1 hour time frame means that this candle is a summary of what happened, what transpired between buyers and sellers in 1 hour. Right, so at the beginning of that 1 hour, price opened at $300. Then sellers push price down to as low as $50. But buyers came and rejected the sellers. That's why this is a bullish rejection, because it is the buyers that rejected the sellers, right, and pushed price up, and it closed almost at the same place where it opened, and it left a week to the downside. It left this week to the downside. So with this dragonfly doji, you should know that buyers are the ones that caused this week rejection. And if the next candle closes bullish, or next two candles closes bullish, you should be buying, because the buyers have been able to confirm. We've been able to confirm that the buyers are in control, and they might continue pushing price up. So for now, just know that this is an indecision candle. This is a dragonfly doji, right, which shows that buyers are the ones that cause this rejection. After sellers tried to push price down to this level and fed, buyers came and took over power from sellers and pushed price up, and it closed here. Here now, this is the opposite. Remember that this one here, the open price is still here, and the close price is almost the same place where it closed. Then buyers want to keep on pushing price up, but sellers came and rejected. This is bearish rejection. Sellers came and rejected the buyers, and then pushed price down, and it closed almost at the same place where it opened. So this one is the gravestone doji, which shows sellers influence. This one is dragonfly doji, which shows that the influence of buyers here is stronger. And they will want to keep on pushing price up. So if you see this type of candlestick pattern, which is dragonfly doji, your sentiment should be towards buying, but you need additional confirmation. You need additional confirmation, at least a bullish momentum candlestick, to confirm that buyers are really taking price up. Here too, you also need additional confirmation, probably another bearish candle that closes with strong bearish momentum, to confirm that sellers want to keep on pushing price down. So, but for now, like I said, don't worry yourself. Just know that if you see a candlestick pattern like this is a dragonfly doji. This one here is the gravestone doji, right? So the next candlestick pattern I want us to look at is hammer. There's a candlestick pattern that is called hammer. Right? So, or you can also call it pin bar. Very, very important candlestick. I'm discussing the most important. There are a lot of candlestick patterns, but I'm discussing the ones that actually has higher predictive value. You understand? Candlestick pattern called pin bar. This pin bar, some people even call it hammer. You can call it hammer, just as the shape of hammer is. That is how it is. Pin bar. So remember that every candlestick pattern has the bullish part. The bullish part of this pin bar. Alright, some people call it, you can call it bullish pin bar, or still call it pin bar. The bullish part, and it also has the bearish part. Alright, so now this bullish part here, you can call it bullish pin bar. Alright, bullish pin bar. Or you can still call it pin bar, because it is the same thing. You can still call it pin bar, and you can still call it hammer. Now look at how the shape is. You will come to the chart. It's not going to be exactly like this, but you come to the chart and you see a candlestick that has the shape of this Monday hammer, something like this. Right, this is it. And this opposite one here is called the shooting star. Alright, this one here is called shooting star. Like I said, the name does not matter. You can even call it inverse or inverted. We call it inverted hammer. Inverted hammer. You get hammer turned upside down. Inverted hammer. You can even call it inverse pin bar. So whatever you want to call it. You get. But it is just the opposite of this particular pin bar. Look at it like this. It is inverted this way. So That's how it is. So what you are seeing here is the bullish pin bar, and what you are seeing here is the bearish pin bar. Simple. Bearish pin bar. So you can still call it bearish pin bar if you wish. Bearish pin bar this way. So these are just how you refer to it. Now, what is the psychology behind the formation of this pin bar? It is very, very simple. What is the psychology behind it? Of course, you know, here in this particular candle here, we know for this candle to be green in color, this is the open price, and this place here is the close price. But that's not enough. This week to the downside holds significance value to us as retail trader. That's why I said, what is the importance of the candlestick week? The candlestick week tells us how low sellers were able to push price down. You see, this is 1 hour time frame. Look at how low sellers were able to push price down. Sellers actually push price down to as low as this place. Let me put price here. Price opened at $100. It's now closed at $120 at the end of the 1 hour. $120. But there was a time that sellers brought price down to $30. But sellers were not able to close it here. Buyers came with stronger power and momentum and pushed price up and closed it above the open price. And that is what made this candle to be a pin bar or hammer. So just based on the name, based on the name, that's why I say the name does not really matter. What matters is you understanding the information it carries. Down here it is the same thing. In this particular scenario, you are seeing that sellers, if you see this type of candlestick, sellers are in control. Look at this, it shows that it's actually opened here. This is the open price. It opened above here and it closed here. Buyers push price up and buyers wanted to close price here, but sellers came and rejected. This is bearish rejection candlestick, and sellers push price down and closed below the open price, and that is what led to this candlestick being like this. So this is shooting star or inverted hammer or bearish pin bar, whatever I want to call it. But just know that here sellers are in control. In this particular case here, buyers are in control. All right. So now the next candlestick pattern we want to look at is let me check. We've done engulfing, we've done doji, we've done pin bar. So let us look at star as a candlestick pattern that we'll call the star. Alright, like I said, you can call it anything you like. Just understand the information they carry. This is the star. Alright, this star has two types. There is morning star and there is evening star. That's just how it is. There is morning star is for buying and the evening star is for selling. Alright, so remember that your goal here is to buy and to sell. Simple. So any candlestick pattern you learn, you should know the bullish version for buying and then the bearish version for selling. So pay attention to this star. This star is one of the candlestick patterns where three candles will come together to give you information. When we are looking at bullish engulfing, just two candles. Hammer, only one candle standing alone to give us information. Doji, only one candle standing alone to give us information. But in morning star, three candles are involved. Alright, three candles are involved. And if you pay very close attention, understand the psychology behind the formation of the morning star. So for example, now you see a bearish candle. This bearish candle shows that sellers are in control, right? Because price opened high and closed low. Sellers are in control. Now you now see another candle here in the middle. Let me use this, but there are so many variations of this morning star. Look at this candle in the middle. You see candlestick A is showing that sellers are in control. Candlestick B is showing that there is indecision. That means that the power of the sellers have started reducing. You see that this, if you compare these two candles here, this first one here has strong selling pressure or bearish momentum, but this one shows that the momentum of the sellers is no more as strong as it were in this first candle, and then you now saw a bullish candle this way, which shows that buyers have now taken over, something like this. You see, these three arrangements here is what we call morning star. Like I said, morning star. So what should you do here? When you see this type of candlestick pattern, you should be looking for buying opportunity. Why? Because buyers have taken over. Buyers are already taking over. Sellers were in control temporarily, but then buyers are now coming in control. Alright, there's another way this morning star, like I said, there are different variations. You can see this morning star in this way. Sometimes you see a bearish candle like this, and then you see another bearish candle again. But the most important thing here is that if you compare the bearishness of these two candles or the momentum of these two candles, you see that this one here has strong bearish momentum, and this second candle here is also a bearish candle, but it doesn't have as much momentum as this first one. And then you now see the final confirmation, which is a bullish candle with strong bullish momentum like this. You see, so this arrangement here is also morning star. This is confirm morning star. You should be looking for opportunity to buy. Another version of this morning star is this situation where you can see a bearish candle. This one, you can see a bearish candle like this. Sellers are actually strong, trying to push price down, and then you now see a bullish candle. You now see a bullish candle this way. Bullish candle, the bulls trying to take over gradually. So you get gradually coming in. This is a sign that the bulls are coming in gradually. You see, and then finally, you're not going to be buying after this small bullish candle. You want to wait for your final confirmation. That is when you will now see this strong bullish momentum candlestick, and this is your morning star. You should be buying. Right? You should be buying. Why are you buying? You are buying because you've seen confirmation that the buyers are in control. This is bullish. This is morning star. This is morning star. This is morning star. So for the bearish part of it, which is evening star, we call that one evening star. The evening star candlestick pattern. Let me write that down. Evening star candlestick pattern. So it is made up of 3 candles as usual. 3 candles. The first candle is a bullish candle. The first candle is a bullish candle like this, showing that buyers are in control. Buyers want to keep on pushing price down. Alright, so the candle in the middle varies. Sometimes the candle in the middle might just be an indecision candle like this. Alright, the candle in the middle can also be like this. Whether it is the color of indecision candle does not matter, but this is showing that yes, buyers are no more strong. And that candle in the middle can be something like this, maybe like this. This is just a bullish candle, but you know that the bullish momentum is not that strong. It's showing that the bulls are losing energy, they are losing momentum. Or it could be a bearish candle. Alright, the candle in the middle could be a bearish candle like this. So these are different variations. So, but the final confirmation is when you now see a bearish momentum candlestick that now takes over the price like this. So this is what we call evening star. Are you seeing evening star? It's made up of at least 3 candlesticks. One evening star, one will be a bullish momentum candlestick. The second one will either be a bullish or bearish candle with little or no pressure, or with lesser pressure compared to the bullish candle trying to push price up. Now the final confirmation is now a bearish candle with strong bearish momentum to the downside. Is evening star. Alright. Finally, which other candlestick? Tweezers. Let's look at tweezers before we look at Harami. As a candlestick pattern, we call the tweezers the tweezers pattern. At tweezers this way. So there is tweezer. There are two types of these tweezers. There is tweezer bottom and there is tweezer top. So the bullish version of tweezer is called tweezer bottom. Tweezer bottom this way. This one is very easy. In tweezer bottom, you are looking for buying opportunity. But here you are going to see it's made up of two candles that has equal and opposite momentum. This is a bearish candle, and this is a bullish candle. See that these two candles have equal and opposite momentum. The example I usually use is two heavyweight champion. This is Triple H and this is John Cena. This red candle is sellers pushing price down, and then buyers will come with the exact equal and opposite momentum and takes over price from the sellers. So it's a valid candlestick pattern that signifies that the buyers are in control. So the opposite is tweezer stop. Tweezer stop is the opposite. This way, call it tweezer stop. So here, when you see this candlestick pattern, you should be looking for selling opportunity. Tweezer stop. Tweezer stop this way. So here you want to see a bullish momentum candlestick. Bullish momentum candlestick like this, showing that buyers are aggressively pushing price up, and then suddenly you now saw a bearish momentum candlestick as well with the same equal and opposite momentum, and then push price down. This is a valid candlestick pattern that you can use to sell. When you see this type of candlestick pattern, just know that sellers are in control and you should be selling. And here now shows that buyers are in control. You should be looking for buying opportunity. Right? That is it about tweezers. They are all in the chart. You are going to be spotting them. Like I said, you need to train your eyes to be able to spot it, and you need to also understand the information each of them carries. That's the most important thing. Finally, there's a candlestick pattern called Harami. It is not my best candlestick pattern. I don't even trade it. I don't incorporate it into my trading strategy, and I will tell you why. I will tell you why I don't trade Harami, but it's good you know it. It's good you know it. And these are not all the candlestick patterns. There are a lot of candlestick patterns out there, but bro, you don't need to trade everything. You don't necessarily need to trade all the candlestick patterns out there. Right? But it's good you know this one called Harami. Harami stands for, they said it means pregnancy in Japan. Right? Pregnancy. I'll be pregnant. Pregnancy. That's what Harami means in Japan. Remember that I said Doji means indecision. Harami now means pregnancy. So some people even call this candlestick pattern inside bar. Just know that now you are just consuming knowledge, so that if people are having conversation around forex, candlestick pattern, chart patterns, you have something to say. Right? But at the end, we'll combine this knowledge together and use it to do technical analysis in the real market condition. Right? We'll combine this knowledge together and then formulate a strategy using it, and use it to analyze the charts, the real charts, and then make money in the forex market. For now, I'm just consuming the basic knowledge It doesn't make sense that we jump all these things and go into analysis when you've not even understood candlestick pattern, chart patterns. At the end, you might decide not to even incorporate all this into your trading strategy, but at least you know them. Alright, so it is called inside bar candlestick pattern, inside bar. Some people even call it mother and baby. Alright, these are just the things that you remember, and you'll be able to know that this is kind of what we are talking about, mother and baby. So now, how does this candlestick pattern look like? You need to pay attention, or you listen to it again and again and again before you'll understand it. It's somehow confusing. We call it the bullish. We have the bullish harami. Like, you already know that every candlestick pattern must have two bullish harami. Alright, so this bullish harami is made up of a bearish candle this way. You see a bearish momentum candlestick, and then you see a small bullish candle, which is the baby. Sure, you get. So this one here now is the mother, and this is the child, mother and child. So this mother is pregnant with a child, something like this. You see a mother like this, and the mother is pregnant with a baby. So this is the mother, and this is the baby it is carrying. So this is the baby, and this is the mother. Now, the psychology behind this trading strategy, the psychology behind this candlestick pattern, is the fact that this baby will probably continue growing, you understand, and then keep on pushing price up. So you get. But I have my own reservation around this candlestick. I don't want to trade. I'm not convinced that this small bullish candlestick is bullish enough to push price up. Why would I be trading this bullish harami when I can trade bullish engulfing, when I am sure that at least the bulls have completely engulfed the bears? Because if you check here now, you see that in this candlestick pattern here, this is the bullish candle, this is the bearish candle. And remember that I want to buy when buyers are in control. If I have this now, I am sure, at least I am certain, that the bulls have completely taken over. The bulls have completely taken over. This is bullish engulfing. The bulls have completely engulfed the bears. I am buying with more confidence than trying to buy when this bullish candle is not even equal. Right, is not even equal. Like in the case of tweezer top, in the case of tweezer bottom. I hope you remember that tweezer bottom is like this. There is a bearish candle with strong bearish momentum, and then there is a bullish candle. This one here is equal and opposite. So you see, and now tweezer bottom. At least I have more confidence trading tweezer bottom and trading bullish engulfing and trading Morningstar. Remember Morningstar? In Morningstar, we are going to have a bearish candle like this. Sorry about that. We'll have a bearish candle this way. Then we'll have probably another bearish candle like this, but this one has smaller bearish momentum compared to the previous one, like this. But the final confirmation is that there should always be a bullish momentum candle. See, there is always a bullish momentum candlestick that will confirm, yes, you get that we should buy. So that's why I rather trade this. This is good for me. This is relatively good for me. This is good, probably the best. But this, it works, but I am in doubt. Alright, until probably the next candle forms something like this, I'll be more confident trading it. But if this one happens, it's already close to morning star. Are you seeing now? So that is why I said I don't really incorporate bullish haram into my trading strategy. I don't trade it. It's not my favorite candlestick pattern, but that doesn't mean that it doesn't work. It works as well. So you get, because the psychology behind it still makes sense. It works. And there's no candlestick pattern that works 100% of the time, but more often than not, if you trade them with additional confluences in direction of the trend of the market, trade them at the right point of interest, you are going to be profitable trading them. All right, so the next stuff here I want us to talk about is the bearish harami. The bearish harami. The bearish harami is just the opposite of bullish harami. This time around, it is the bullish candle that is carrying a baby. So you see a bullish candle this way. Then this bullish candle is carrying a small baby that has the potential of growing and continue pushing price down. But just know that the bullish harami is this. This is the bullish harami, and this is the bearish harami, and this is the bullish harami. Alright, so that is it about that. We've looked at different candlestick patterns. And what did I say about candlestick patterns? Candlestick patterns have predictive value. Learning about candlestick patterns is like learning a new language. If you come to a new country and you can't be able to speak their language, it will be difficult for you to interact effectively. That is how it is. You open the chart, the language that the chart speaks is the language of candlesticks. It is the language of Japanese candlesticks, especially when you have made the decision that you are going to be analyzing using candlesticks. You need to understand this language. You need to be able to speak it, interpret it. You need to be able to know what the information each candle carries, understand time frames, understand that as the shape of these candles differs, that is how the information they carry differs. Understand that a single candle can stand alone to give you information, like the doji, the hammer, and there are situations where two candles will come together to give you information, like the engulfing, right, and the harami or the tweezer. And there are also times when three candles will come together to give information, like the morning star and the evening star. Now, when we now have conglomeration of candles coming together to give you information about what is going on between buyers and sellers, that is when we now go into chart patterns. Chart patterns, you're looking at double top, double bottom, head and shoulder, flag patterns, inverse head and shoulder, and a whole lot of them. So, but at the end, it is still candlestick. You must understand Japanese candlesticks. You must be able to interpret Japanese candlesticks, because this is the only visual representation, the only graphical representation of what is going on between buyers and sellers that we have access to as retail traders are these Japanese candlesticks. So today's class, we looked at different candlestick patterns. We've looked at doji candlestick pattern. We have the gravestone doji and the dragonfly doji, both for buying and selling. You have the engulfing candlestick pattern, the bullish engulfing, the bullish engulfing, and the bearish engulfing. This is me summarizing what we've done tonight. We also have the star. We have the morning star and the evening star. We have the pin bar. This pin bar, we have the bullish pin bar and the bearish pin bar. The bearish pin bar can be called the shooting star. The bullish pin bar can also be called the hammer. We have the harami. Harami, like I say, stands for pregnancy. You have the bullish harami and the bearish harami. You have the tweezers. You have tweezer top and tweezer bottom. Now, before I call it a night, right, I believe we still have some minutes remaining. I want to give you a general summary of the candlestick patterns, where we can be able to classify the candlestick patterns into rejection candles and engulfing candles. Right, let us classify the candlestick patterns into two major groups, so that you see how effective it can also be like this. I believe you still have time before this class, the time elapsed. Let's check candlestick patterns. Finally, this is the last part, and this one will help you to drive the whole point home. Right, candlestick patterns. And now I will now be able to do this way. I will group it like this into rejection candles, and then this one into momentum candles. Shall you get? This will help you understand this thing properly. So we have rejection candles. You know those candles that usually have a lot of wicks either to the upside or to the downside. They are called the rejection candles. Alright, and then there are other candles that are characterized by having big body. Remember that I told that the body of the candlestick carries information about momentum. Sure, you understand? Momentum is just like the bullish or buying, the bullish or bearish pressure, the buying or selling pressure. Whenever you see a Japanese candlesticks whose open is above the close, for example, let me digress a little bit. You have a candlestick like this. Where is that? You have a candlestick like this. This candlestick has big body, very big body with little or no wicks. Look at the wick, very small, right, compared to the body. This is a bullish momentum candlestick. You understand? The buying pressure. You see, within, let's just assume that this is 4 hours time frame. 4 hours time frame. Within these 4 hours, buyers were able to push price from, let's just say, $100 to $600, right, within 4 hours. You understand now? It shows that most of the trading activities were confined within the open and close price. A lot of the trading activities, little or no selling or trading activities happened outside the open and close price. Let me say that again in case the first one I said didn't make sense. Now, when you see a Japanese candlestick whose open is below and the close is above, with very big body like this, it shows that most of the trading activities were confined within the open and close price. Almost all the trading activities within that particular time frame, most of the trading activities happened within the open and close price. And since the wicks are very small, it also signifies that little or no trading activity occurred outside the open and close price. As you can see by the wick, look at how small the wicks are. That shows that this is the bullish momentum. If you participated in this market at this particular point in time, you would have made crazy amount of money buying at $100 and selling at $600. 600 minus 100 is crazy. It's $500 within that particular time frame. That is how far buyers were able to push price up. So most of the trading activities were confined within the open and close price. However, the reverse is the case. When you see another candlestick like this, sorry for this digression, but I think it's very important. You see another candlestick like this, where the body is very small body, right? And then look at how the wicks are bigger and longer than the body. This is actually a bullish candle. Of course, this is a bullish candle. Why is it a bullish candle? Just because of the fact that it is green in color and the open is below and the close is above. However, little or no trading activity. The trading activity that took place within the open and close price is very small, and that is why the body of the candle is small. But most of the trading activity happened outside the open and close price. As you can see, look at how long the wicks are. This wick to the upside means that sellers push price, buyers push price to this up as high as this. Sellers came down, rejected them. So a lot of trading activities, up and down movement outside the open and close price happened as well. Look at how sellers brought price down here, buyers rejected and pushed price up. But little trading activity occurred within the open and close price. So this is a bullish candle, but it is not a bullish momentum candlestick. The momentum of the bulls is very small. Alright, so there is shared power between the bulls and the bears in this particular candlestick. So that is it about that. I was talking about momentum so that you see the importance, and we want You want to participate in the market when there is strong momentum. When there is strong bullish momentum, you want to be buying. When there is strong bearish momentum, you want to be selling. So when there is no momentum, there is equal energy between buyers and sellers. That means price is consolidating or ranging at that particular point in time. You should as well stay away from the market. And if you are able to catch price when there is you bought when there is strong bullish momentum, you're going to be making more money than when you are buying when the market is consolidating. There's little or no pressure in the market and shouldn't be participating or buying at that particular point in time. Sure you get? So you will understand this thing more when we start the real analysis and trying to bring them together to formulate a trading strategy. So all these candlestick patterns we learned, let me go back to doji, engulfing, star, pin bar, harami, tweezers. We can regroup them into two: rejection candles and momentum candles. So when it comes to rejection candles, of course, you have bullish rejection candles and we have bearish rejection candles. All right, bullish rejection candles. Let me know whether time will permit me to get these points down. Bullish rejection. Yes, bullish rejection candlesticks. Can see for candlesticks, bullish rejection candlesticks. So how many? Where are the bullish rejection candlesticks? Let me draw them. Let me use this my tool to. This is a bullish rejection candlestick. As far as any candlestick, no matter the color, as far as the wicks are protruding from the downside, from down to up, is a bullish rejection candle. And I've told you before that the color of rejection candles does not matter. This one is I think this is advanced something. I don't want to confuse you with this, but I will explain later why these two candles are the same. Right, these two candles are the same. The color does not really matter as far as it is a rejection candle. This as well, this and this, we trade all these candles the same way. They are all rejection candles, so we trade them the same way. Right, you see these four candles that I drew here, this one, that's why I say the names of these candles doesn't really matter. Right, what matters is what is the information they are carrying. These four candles are the same, but for you to buy, even though this one here, let me label them candlestick A. I'm already taking too much time than I expected. Candlestick A, candlestick B, candlestick C, candlestick D. Sharp. If you check candlestick C and candlestick D, you see that they have the same shape, just that this candlestick C is red in color and this one is green in color. Now this is a rejection candle. Both of them are bullish rejection candles. Why? Because it is the bulls that cause this rejection from here and push price up. But the difference between C and D, the reason why C is red is because we've already given the instruction to our broker or to our trading platform that whenever the open price is above and the close price is below, that candle should be red. So every candle in the chart must either be red or green. But in this case now, are you seeing that the bulls actually caused this rejection and push price up, just that they were not able to close it above the open price within that stipulated period of time? That is why it is still red. But here now, when the bulls caused the rejection, they were able to close it above the open price. The open is below and buyers were able to close it above. So these two candles, this one is more formidable, this one is more preferable than this, but they are the same. We trade them the same way. If you see these two candles, the fact that this one is red doesn't mean you should be looking for sell. You should all be looking for buys. But this one, buyers are stronger here because when they caused the rejection, they were able to close it above the open price. The same thing happened here. These two candles, you should be looking for buys. Buyers are in control.
This one here, this is the doji. The buyers caused this rejection. This week you are seeing here was as a result of the bulls rejecting the buy. That's why I call it bullish rejection. The bulls pushed price up and they were able to close it slightly. There is an infinitesimal difference between the open and close price. So every candle must be red or green. So this one is green in color because there is 0.00001 difference between the open and close price. So the open is probably here and the close is up, and that's why I'm seeing this. This one here, the open is above and the close is below. Very, very small, unnoticeable, but it is red because there is still very tiny difference. So you won't use because this thing is red and tell me that you are selling, that sellers are in control. No, buyers are still in control. They are all rejection candles. I don't know whether it is making sense. Now, when it now comes to the other opposite, these things are all bullish rejection candles. Let me know whether I can clean all these things I did here. Okay. So they are all rejection candles. This is just the point I want you to know, that when it comes to rejection candles, the color does not matter. You see this in the chart a whole lot of time, and if you are not careful, it will confuse you. Right? It will actually confuse you. So now we are looking at we looked at bullish rejection candles. By now you should also know how the bearish rejection candles will look like. The bearish rejection candles, let me write them as well. Bearish. So bearish rejection for R, candles for C. So just to save time, bearish rejection candles, just the opposite. Here the wicks now are from the downside. Look at it here. This is a bearish rejection candle. Alright, this one too is a bearish rejection candle. Even though it is green in color, it is still a bearish rejection candle as far as the wicks are protruding from the upside. This one here now is a bearish rejection candle. Alright, once you understand this into this level, this is a bearish rejection candle, and this one as well. Let me draw this one this side to give space for the other side. This is a bearish rejection candlestick. So these candles here are all bearish rejection candles. Why? Because the bears are the ones that cause the rejection, because buyers want to push price up and sellers came and rejected the buyers and pushed price down, and here they were able to close it below the open price and it is red. The same thing happened here. Here they were not able to close it below the open price. There is slight difference, very small difference. But these candles, that's why I say the name does not matter. You see this candle, your mindset should be towards selling. Just that you need additional confirmation, like one other bearish momentum candle like this. You say yes, the sell movement has been confirmed, right? So because of time, let's now go to momentum candles. We've looked at the rejection candles and momentum candles. We have bullish momentum candles, of course, and bearish momentum candles. So this is bullish momentum candles. Bullish. I think we still have time. Bullish momentum candles. MC momentum candles. And then bearish momentum candles. Then this is for bearish momentum candles. Now you already know what, that's why I gave you that illustration of what a momentum candlestick looks like. Alright, bearish momentum candlestick patterns. So that's that. Rejection candlestick patterns. So you get, so bullish rejection candlestick patterns, and this one is bearish bullish momentum candlestick patterns. So please don't forget, we're talking about candlestick patterns, not just candle. So rejection candlestick patterns and momentum candlestick patterns. I hope it's making sense. So when it comes to bullish momentum candlestick patterns, you'll be seeing something like bullish engulfing. So you get, of course, you should know bullish momentum candlestick. The head here is bullish engulfing, where you see a red candle followed by a green candle like this. This is, you see, bullish engulfing. Look at how this one engulfed this one. Another bullish momentum candle see that is there is this. You will see this tweezer top, tweezer bottom. Sorry, look at this now. Is a momentum candlestick pattern. Is a momentum candlestick pattern. Show you they see a momentum candlestick pattern. Another one that is important is the morning star. Morning star, where you see this bearish candle, then probably see this rejection candle in the middle. This is the best form of it, rejection candle, and then you will now see bullish engulfing candle like this. So they see, so these three here are all momentum candles, bullish momentum candlestick patterns, bullish momentum candlestick patterns, bullish momentum candlestick pattern. Are you seeing that the final candle here are strong momentum candles? Look at it, momentum candle. Then when it comes to bearish momentum candlestick pattern, we want to see bearish engulfing. Bearish engulfing is like this. You see a bullish candle that is totally enveloped or engulfed by a bearish candle. You see it like this, bearish engulfing. You can also see tweezer top. Tweezer top is when you now see bullish momentum candle like this with another one bearish, equal and opposite force. Alright, that is it. You can also see this one again, which is now the evening star. You now see bullish candle like this, then followed by rejection candle. Remember I told you that the candle in the middle can be rejection, it can be any other color of candle, but just know that it can be a momentum candle. Then you now see this sharp. So you see how we've been able to group it. These are momentum candles. If you want to label them, you can as well label them. So what you are seeing here is bearish engulfing. This is bearish engulfing. Bearish engulfing. Bearish engulfing. So what you are seeing here is tweezer top. Tweezer top. I'm just too fast. I believe I've not committed any blunder. So that's tweezer top, and then this one here is evening star. Shall you get? This one here is evening star candlestick pattern. Evening star. So that's evening star. So here, remember that this one here is morning star. This one is morning star. This one is morning star. And this one here is tweezer bottom. Tweezer bottom. Sharp. Why this one here is bullish engulfing. Bullish engulfing. Did you notice anything here? You notice that I did not add harami anywhere here. I did not add the bullish or bearish harami because those are not momentum candlestick patterns. Shall you get? I didn't add that harami anywhere here. So this is, of course, Digital Eselsa. I am going to take these screenshots. This is Eselsa-FX. Let me leave digital for now. This is Eselsa-FX. So I will take that screenshot and add it to your folder because I know it's going to be helpful later. That's Eselsa-FX. Let me take these screenshots from here to here, and then sharp. So what you are seeing here is a summary of everything about candlestick pattern. In fact, from now, after now, you don't need to watch any other video or do any other training as far as candlestick patterns are concerned. We've touched the most important candlestick patterns, the one you need for you to become profitable in the forex market. They are here. Alright, all you need to do is just to go to the chart, know how to spot them because they are there in the chart. They are there in the chart. In every time frame, you are going to be seeing candlestick patterns. See here now, what you are seeing here is already morning star. Look at it here. Look at it. Morning star. Look at a bearish candle. Look at a bearish candle. Look at rejection candle, and then bullish momentum candle. And after that, look at how price went up significantly. Sure you get. So that doesn't mean it happens like this all the time, but I'm just giving you an example. Your goal now is just know how to spot them. Just spot them like mumu in your chart. Alright, we are now going to be adding meaning and adding context to them later. You now see that it's not everywhere you see morning star that it will play out. It's not everywhere you see evening star that market will sell. So, but that will be a topic for another day. So see you next time. I will try and upload this video for you to watch.